from what we can gather, the LBMA is probably running out of gold to the extent that
Hello and welcome. Thanks for tuning in today. I do appreciate it. In this video, we are going to talk about the potential for gold-backed treasuries, and we are going to take an in-depth look at fractional reserve gold and the situation over in London at the LBMA in an effort to try and determine just how bad things might be for the LBMA right now. Today, I am joined by the one and only Silver Hermit. He is a market analyst and sound money advocate that will help us gain a better understanding of these topics. Oren, welcome back, my friend. It's great to speak with you today.
hello, thanks for having me. It's wonderful to talk to you.
You bet. This is going to be an interesting conversation today. Judy Shelton is known for being an advocate of sound money and has proposed issuing a 50-year treasury bond that would be convertible into gold that could be initiated next year. This would be a good way to put to use the gold that is currently undervalued in the U.S. reserves. Oren, what do you think about the idea of gold-backed treasuries?
Well, first of all, I want to say Judy Shelton is probably one of the most sensible people in, you could say, mainstream economics. Like she's,
She's
I
great.
guess, yeah, I think she knows what she's doing. I mean, she appears to be a very clever woman, and I think it's a good thing that she has a good chance of being nominated to the FOMC. And I started looking into that proposal of issuing gold-backed treasuries. At first, I was kind of skeptical because I was asking why should anyone have a gold-backed treasury when they can have the real thing, when they can have the actual gold?
Right.
Because of course, if you own a gold-backed treasury, there is always the risk that eventually, after 50 years, because they're talking about 50-year bonds, that eventually at the end, the U.S. government won't have the gold in order for you to convert that bond into physical gold. So there is always that risk of default. But
Sure.
if I try to look at it from the point view of the Treasury, from the point view of the federal government, then it has the potential in an inflationary environment, it has the potential to generate more trust in US debt and allow the United States to continue and borrow money and perhaps restructure its debt under more favorable terms.
Sure.
Because if you think of it, why do people demand higher yields when they buy long-dated treasury bonds? Because there's this risk of inflation, which is already manifesting itself. Inflation is already here. So the cost of maintaining that debt becomes much higher due to rising interest rates. And if you are able to somehow eliminate that risk of inflation by promising people to convert those bonds to gold, if they so wish, when they mature, at the current market price of gold, that needs to be stressed. That means that they are protected, as though protected against inflation. So you eliminate that risk of inflation. You allow the federal government to borrow more cheaply with a lower yield, and perhaps this way restructure the debt.
And it makes sense that you would want a higher interest rate if it's over a longer period of time, assuming inflation was consistent. You're just going to need to get a bigger return on it to get an equivalent amount of money back out of it. And gold has really proven its ability to retain value over time. It's definitely seen as being more stable than fiat currencies, and there's a good reason for that. Having a gold-backed bond could be a great way for a country that's looking at potential economic uncertainty to offer some stability to would-be buyers. And like you said, that would need to be convertible at whatever the current market price of gold is in order for buyers to be interested. And so I think that that was an important point you brought up. This is
It
something.
needs to be, of course, she did not release many details regarding, the technical details of how it's going to work. So I have to do some guesswork there. But the way I understand it is that when they issue the bond, then on the date of the issuance, it's going to be, mentioned the price of gold, the market price of gold at that date. And there's going to be a promise to convert that bond, the proceeds of that bond, to physical gold at that price. For instance, in 50 years' time, the price of gold goes up tenfold due to inflation. You're still going to get gold at the current price. So it's as though you bought the gold at the current price. From the point of view of the buyer, I can understand that it's a way of owning gold, or at least a proxy to gold, and earning a return on it at the same time. But uh, what you pay for it is the risk of default, that eventually in 50 years' time, the United States government is not going to be able to give you that gold, for instance, because they've issued too many of those bonds and there's not enough gold in the treasury. But we expect that if that is the case, then the price of those bonds is going to plummet gradually as people realize that there's not enough gold, and you'll be able to, this will reflect the risk of default. The price of the bond is going to reflect the risk of default. So kind of it a bit balances it out. Um, and one last thing I want to say in this regard is that I think that this is a way for her to introduce the idea of a gold-backed currency, in an indirect way.
I think that that's a really interesting point, but it's also a good point. 50 years is a really long time. I'm sure people would see it as being a lot more attractive if it was shorter. And you're going to have a lot of faith that the U.S. will hold on to the gold. The U.S. will remain strong because as of right now, if it's kind of like buying a paper contract for gold that you would redeem in 50 years, and the U.S. is very strong, so it's stored in a safe place, and it would seem likely that this is something that you'll be able to get your money back out of. But 50 years is a long time. And so there might be some people that are like, I don't know if I have enough faith in the US government to buy a 50-year bond from them. Yeah, it'll be really interesting to see how this all plays out.
Like, if you were to ask me, should you invest in this? I would tell you, don't put all your money in such an instrument. You can perhaps take a little bit of your savings and put them into such a bond, a gold convertible bond. I would still advise people to hold the bulk of their savings in physical metals. Um,
Heck yeah.
um, I just wanna explain. If just imagine that these bonds become popular as an investment vehicle,
Okay.
and imagine that the Treasury starts issuing them in smaller and smaller denominations, like you know, $100 bond, $50 bond, $20 bond, $10 bond, and they make them bearer bonds. It means that the person who holds them is entitled for their proceeds. You don't need to be registered anywhere.
That
And
would make them a
then,
lot more attractive. And especially in smaller denominations like that, because I could see people giving them out to younger relatives and things like that. Someone that they feel strongly will still be alive in 50 years, you know.
no, I'm thinking that this will effectively turn them into a gold-backed currency. It allows them to circulate, and provided that they have a small enough denomination that you can have, day-to-day transactions, it effectively turns them into a gold-backed currency. And it's just a way to introduce a new gold standard through the back door.
That's great. And hey, Judy Shelton might be playing a long game here and came up with a pretty witty way to do this. So I hope that that's what happens with him, honestly.
Now, the moment it dawned on me that this could be her intent, her original intent, I realized that this is a smart move.
Heck yeah, that's a brilliant move. Well,
But it does mean that the regular dollar is going to lose a lot of its value. Hopefully, it won't happen overnight. It's not going to be like a revaluation that you announce and suddenly everyone who's holding dollars loses their money. It's going to be a very gradual process in which this new currency is being introduced and people start drifting towards it, being attracted towards it because it preserves its value better than regular dollars, and like gradually the global trade drifts towards that new currency, especially if there is also a digital form of it and you can transact internationally with it. And so it doesn't happen overnight. It's a gradual process in which the world can transition towards a gold-backed currency.
I could see it gaining popularity, and then before too long, everybody would want to get their hands on it. Just listening to you talk about it, I want a small denomination gold-backed treasury already. So that could really go somewhere. Well, yeah, thanks a lot for sharing your thoughts on that. Looking across the Atlantic, there has been a lot of gold exiting London. About how much has been leaving and who's standing for delivery? Who is requesting all of this gold?
Yes, well, before we start talking about the LBMA, I should admit that a couple of weeks ago you asked me, and I was a bit dismissive about the whole story. The reason for that is because, well, it was just breaking, and we didn't have too many details about it, and also because in recent years we've had so many stories, similar stories, which turned out to be nothing burgers. So I was a
Right.
bit dismissive about it, and
And that
I'm
makes
kind of
sense.
sorry. Yeah, I apologize for it because it turns out that it's a much bigger deal than we first thought.
Hey, no
And
sweat. And information is coming out daily, you know.
yeah, it's turning into a big story. And okay, so the thing is, about 400 metric tons of gold have been moved in the past 2 months from the LBMA to the coffers of the COMEX. And when you're asking me who's taking that gold, who wants that gold? Well, we don't really know. Somebody at the COMEX is standing for delivery, and the way I understand it is that the COMEX had to import all that gold because there's someone, perhaps a few parties who are standing for delivery. And although the comics, like if you and I were to go to the comics and ask for delivery of physical gold or silver, they wouldn't be very cooperative.
Not possible, right? Yeah.
No, they'd give us the runaround, and eventually they would probably issue some kind of there's this certificate called exchange for physical, which allows you to go and get gold or silver from the LBMA in London. So we would probably get dismissed this way. But probably someone who is powerful, someone who is rich and powerful, is standing for delivery at the COMEX. So the COMEX had to import this amount, this huge amount of gold, which is quite unusual.
Yeah, it is a whole lot of gold. I read that the COMEX gold inventories are up to 926 metric tons or 29.8 million ounces, and this is a 75% increase since last November, so November of 2024. Um, so so
Yes, this is comparable to the amount of gold which flowed into the COMEX during the early days of COVID in 2020.
th This is happening really rapidly too. Like you had mentioned a few weeks ago, it did, before we knew what was going on, didn't seem like that big of a deal. But you know what's interesting? I had read an older article that said the LBMA does a 1 month reporting lag. And so you never have up-to-date information on their inventories. It's never current to that day. It's always going to be a month behind. The article had even speculated there were some times where there was a 3 month lag on some of their reporting, but maybe that never happens anymore. I'm not sure. Um, but in my opinion, this lack of transparency or kind of gray area with this lag time could be a reason for groups outside the US to start asking for delivery of their gold as well, just because of how much movement they see is going on. And I could see it making them nervous because they know that the information they can access isn't from that day.
Yes, definitely. Now, the LBMA, which by the way stands for the London Bullion Market Association, is a group of dealers who deal with the over-the-counter market. Now, as opposed to the COMEX, it's not exchange driven. These are, deals which are done privately. So naturally, this market is opaque and there's not a lot of data coming out from there. But from what we can gather, the LBMA is probably running out of gold to the extent that, it's called the float. It's the amount of gold that they have for sale. Because the LBMA probably has a lot of gold. According to their data, they have 8,686 metric tons of gold stored there. However, the vast majority of that amount is not available for sale because there are 5,360, again, 5,365 metric tons of it, which are held by the Bank of England on behalf of foreign nations, central banks of foreign nations, so they can't sell that. And they have another around 2,000 tons, which belong to ETFs, to those gold ETFs, and they can't sell that either, which leaves about 1,000 tons for their day-to-day trading, in order to back their day-to-day trading. And the thing is that when you export 400 tons of those 1,000, that doesn't leave a lot for day-to-day trading.
Right, absolutely. So a lot of this gold is never going to be eligible, and they're probably scrambling to try and figure out, how to get more gold on board.
Yeah. Now, one of the questions you may ask is why is the LBMA selling that gold if it needs it? Which is a good question, and there are two possible answers. Well, first of all, either because they need the COMEX to continue operating and they don't want the COMEX to default on those deliveries. That's one thing. But also perhaps because they didn't expect New York to ask for that physical. Um, the thing is, people should be aware that the LBMA is operating on a fractional reserve basis. They have two types of accounts. They have the allocated accounts and the unallocated accounts. And with allocated accounts, you own certain bars of gold. They are registered on your name, and that pretty much means that they don't move from the vault. But that means that you need to buy the whole bar. And these are 400-ounce bars. That's a lot of money to buy a bar of gold at the LBMA. So the
Absolutely.
vast majority of accounts are what we call the unallocated accounts. I think about 90% of the trading in London is done through these unallocated accounts. And when you have that account, it means that you have, exposure to gold. You have the right to buy gold, but it doesn't really mean that you own gold. And probably when it comes to unallocated accounts, there's probably a very small amount of gold which is backing a huge, huge amount of claims over that gold.
Right.
And
How much leverage do you think that they are using?
that's a great question, which we don't have the answer to because they're not releasing the data. Um, some analysts argue that the leverage could be hundreds to one.
Oh my gosh. And so that is a lot of leverage for them to be able to use when they're suppressing the price of gold.
Yes, there is a kind of a way that we can get a feeling of just how bad it is. They say that on a daily basis, 1,400 metric tons of gold are traded at the LBMA on a daily basis. Just to give
Wow.
you a sense of just the vast amount of gold, paper gold. This is not real gold. This is gold. These are gold derivatives. And they are being traded there at the LBMA. And since I calculated there are 252 trading days a year, so you can just multiply these two numbers and reach a staggering number, as though they are trading 352 thousand tons of gold every year, which is more, a lot more than the above ground stock of gold in the entire world. I mean,
Wow. That
since the
that is
beginning of
insane.
humanity, yeah, it's crazy. Since the beginning of history, we only know of about 210,000 tons of gold that have been mined.
Total gold
And
mine throughout of all of human history.
yeah, and take one and a half times, more than one and a half times of that amount is being traded at the LBMA every year.
That is ridiculous. So they're using an unimaginably high amount of leverage.
Yes, and according to their figures, there's about 1,000 tons which are backing this level of trading, this volume of trading. Now, you could
Yikes.
argue that it's the same gold being traded back and forth for some reason,
Sure. And you can
but
imagine a lot of people, 100 people, all think that they own the same ounce of gold, or
yes, and
to
but
put it
you have to
simply.
understand, like I'm sure that there are many traders who are well aware that they are trading gold derivatives who are not really backed by gold, who are only this, there's just a fractional backing to them. But there are also many people, I'm guessing, who are not aware of the risks, and they are buying unallocated gold in London thinking that they own real gold when they only have exposure to the price. And the thing is, the problem with this way of doing business is so long as there's faith in the LBMA, then everything is fine. As long as, normal trading carries on, then everything is fine. The problem arrives when there's a sudden panic in this market, and suddenly everyone wants their gold.
Right.
And if you arrive at such a panic, then you will probably, as the owner of an unallocated account, you will probably not get your gold.
It would be very unlikely.
Or yeah, you will be last in line in a very long line of people, and there will probably be, richer, more powerful people than you at the beginning of this line. They're going to get their gold perhaps, and you're not going to get your gold. So what good does it do to you to own gold this way?
Right. And I mean, we could potentially be talking about central banks for governments, like extremely large corporations would be, is that correct? Like some
Look,
serious power players.
I don't think central banks hold gold in unallocated accounts. They wouldn't be so stupid. They
They'll
have,
just get the physical,
yeah, and
the
they
central
have
banks.
gold in London at the vaults of the Bank of England. And that gold, although it may be leased, but it's not moving. It's not going anywhere because if it does, then the UK government has trouble with other foreign nations. I don't think they would take that kind of a risk. But private people like you and I, if they do have an unallocated account at the LBMA, then they're probably taking a huge amount of risk. They're probably last in line to get their gold if there's a panic.
That totally makes sense. And well, I mean, I guess if it comes down to it, all those people are just going to have to settle for whatever the price was when they asked for it, and it wasn't able to be delivered. Um, it is
Yes,
interesting.
yes, I'm guessing those people will get settled in cash.
I think you're right. Yeah, absolutely.
I don't think they're going to lose their money entirely, but they're probably going to get settled in cash, but with the price of the prior day, the day before the panic.
Right. Well, they're going to try and pay you the least amount of cash they possibly can. I had seen an article that said it's estimated that there are 380 million ounces of outstanding gold contracts at the LBMA. This article is from a few days ago, and these delays are effectively considered a technical default on these contracts because they're not filling these contracts within the time period that they had said. And so that did make me kind of wonder if right now they're testing the waters. They're like, well, let's see what happens. We'll default on some of these contracts. How much pressure will be applied to us from, outside entities? Maybe we'll start trying to pay off some of these people in cash now and see how they respond to it. Um, but they've already technically defaulted on these contracts.
Okay, I want to explain something to our listeners. The Bank of England is supposed to back the LBMA with its own gold, and the gold of central banks. And in times of need, it's supposed to lease gold to the LBMA so it can continue operating normally. And usually, leasing gold takes a day or two, not more than that. But suddenly, those delays that we're talking about, suddenly the Bank of England is asking for longer and longer time in order to lease gold to the LBMA. And the wait period has been extended to 4 to 8 weeks, and we're starting to ask ourselves why is it happening? Why is the Bank of England making it more difficult for traders to lease gold? And would you care to speculate as to why that happens?
Well, I am. I imagine people are concerned that they don't have it. That's always going to be your biggest fear in the back of your mind is they don't have it. As far as what they're saying, they're facing delivery challenges from approved vaults. Basically, it's a shipping manpower type issue. There's not enough trucks to get the stuff here in time. We got the gold. Calm down. It's just going to be another. It's
Oh,
just going to be four to
come
eight weeks.
on. No, it's not very persuasive. Arguing that there are all sorts of technical, logistical difficulties. It's not very persuasive. Now, I don't want to accuse the Bank of England. I don't want to get in trouble, so I won't accuse the Bank of England of anything. So I'll just leave it as a question as to why they're making it difficult to lease their gold right now. I don't know. It's just I don't know.
Let us know in the comments why you think it might be taking them so long to fill these orders.
I want to talk about the dark side of this entire deal. The fact that there's so much trading taking place at the LBMA on a fractional reserve basis. What it does, it artificially inflates the amount of gold in the market. It as though gives us this feeling, this appearance, this illusion that there is an abundance of gold. Because whenever you ask for gold from the LBMA, they say, sure, we'll sell it to you on an unallocated basis. So what it does, it's just another aspect of this price suppression mechanism that we talk about so often. We usually focus on the COMEX, but the LBMA is just as complicit in this scheme of suppressing the prices of precious metals. And I used to think that it was, clandestine. I used to think that it's a secret, but it appears that it's being done quite, the people who are buying gold and silver on unallocated terms, most of them know that this is what's going on, that there's just a tiny, tiny amount of gold and silver backing those accounts. And I don't know if they are aware that they are complicit in this mechanism of suppressing the prices of gold and silver. So that's a very sad thing, that the people who want to protect themselves against inflation are knowingly or unknowingly cooperating with the mechanism which is keeping the prices of those metals at bay.
Right. If you're involved in the paper contract market, you are involved in this whole scheme. And yeah, they definitely do affect the price over there. And it is something as Americans we never think about them and how much of an effect they're having. But they're a significant force. They're a big part to play in what is going on.
Exactly.
Well, Orrin, thank you so much for sharing your insight on these topics. It's always great to speak with you. Everyone, please check out the Silver Hermit's X, YouTube, and Rumble accounts. There will be links to them in the description.
Thank you. Thank you for having me. It's always a pleasure talking to you.
You bet. Always great to speak with you. Everyone, thanks for watching tonight. Please hit the like button and subscribe to the channel so you don't miss our next interview. And I hope you all have a great day out there.